very exciting to be here with you. Maybe I'll just introduce myself first, and then you can introduce yourself. So, as you know, I'm Nancy Mehlman. I am a tax partner at Simpson Thacher and co-head of the global tax practice. In that capacity, I work on a lot of different things in a lot of different sectors, but in particular, sort of within the scope of private equity. So private equity funds, fundraising, transactions, exits, pretty much the entire life cycle of private equity, which is what we just talked about on our panel. So I'll let you introduce yourself.
Thanks, Nancy. Also great to be here with you, and appreciative of your firm's help throughout our life cycle. So it's great to be talking with you here. I am head of global tax and structure, or global head of tax and structuring at Hamilton Lane, which basically has oversight of compliance for our Manco, our Pubco, and across our funds, as well as the investment tax decisions that are made from an investment perspective, considering and sort of solving for investor tax experiences and creating structures that will work for our investors. And then also sort of a new addition to the team is a structuring ops position, which is going to help ensure that the way that we build our products will translate into the actual result that was intended. Because as the products get complicated, there's a lot of different teams internally as well as service providers externally, and we're working to minimize the hiccups.
Yeah, and it's interesting, on the panel we just sort of talked about the role of the head of tax in a private equity sponsor such as Hamilton Lane. But I think because we touched on everything so briefly, one of the things we didn't really talk about was how that's changed over time. How do you see I know you've been at Hamilton Lane for about 13 years. What are the changes that you kind of see in your role there, over that time period?
Great question, and it really has changed, I think, across the industry as well. I had started in private practice and came over from a tax department and was working on sort of transaction investment tax or structuring to a certain degree, but back then it was literally a Delaware partnership with a Cayman, and maybe we started to worry about origination, but the true structuring tax implications or considerations were minimal, and the compliance was completely outsourced. We sort of took it in a little bit by hiring one person at the funds level and one person at the Manco Pubco level when we went public, or around that time. And then since that time, we've just exponentially expanded and have been working hard to keep up, and even restructuring within our firm so that the Pubco Manco, which was historically separate, is now sort of we're all under the same umbrella. We think this is the right way to look at the world because, as you are well aware, our carry vehicles are all pulling from our funds, and so a lot of the Manco issues are all coming up from the fund, and we sort of learn from each other and have a better handle on even things like employee movement, right? And that's kind of a risk area for everyone, I think, but just having the tax group be across our investment teams, sort of working with our sales teams, and then also working with our Corp Fin group provides reduction in risk, I think, overall.
I think as an advisor, I think I've really seen a sea change over the years in how our clients utilize just referred to generically as tax people internally. From the beginning of my career, I think I was telling you this, I have a client, where it was me and just one person in a very large shop. And they were really very reliant on Simpson Thacher and me to really make sure that they were covered in terms of decision making, because one person cannot make every decision in a bunch of different sectors in a business that is very, very fast paced. But what I think we've seen in more recent years is people acknowledging the value of tax professionals internally and moving some of that function, still with not enough people, I think you would agree with that, internally. And I see the role of the advisor sort of shifting to be a little bit more of a support function for the in-house person who is interacting with business professionals, teams internally. How do you see a similar sort of trajectory, and what kind of burdens does that kind of put on the person in-house? How do you form those partnerships internally, which are I think what people are looking for when they hire more internal tax professionals?
Right. So we discussed on the panel, which I think is sort of underlying the question, along with volume, speed is everything these days. And so I think it doesn't always work to just have outside folks, in particular as you have various funds, various structures, various past issues, various investment teams, geographical locations. It doesn't work to just have one or two people as outside counsel helping, or at an accounting firm. But that's not to say we don't still need those people. We just have to have someone internally, and maybe as kind of a judgment call person. So one, we need to educate our investment teams and our sales teams. So you need internal people to understand and then troubleshoot for what we have and what we're making investments into, and what the clients are investing into in their jurisdictions. And so we kind of work to get processes in place, tax explanations in place, relying on advice, of course, and sort of past advice and just knowledge, internal knowledge. But we do, on the investment side, often have our investment teams work directly with our outside counsel, and we feel like that's the most efficient way to scale. We have to figure out how to scale and be efficient. And so what I think the role, and that's probably what you're sort of going to, is the role has changed a bit to be providing guideposts on the investment side, so our investment teams can work with outside counsel and keep us in the loop. And then when there are decisions to be made or certain analyses to be done, we will do that and work with outside counsel and get to the right result. But it kind of works, and we're not a law firm and we're not an accounting firm. Right. We're an investment advisor, so we have to define the roles and lean in on our advisors, and kind of the same on the structuring side, probably less working directly with our sales team, but still some. And so we feel like that complement really works from a pricing perspective, and just from an ability of our internal teams to get their answers in a timely fashion.
Yeah. How do you go about building those relationships internally and making sure that people are aware of the desired processes for different aspects of the tax function within the firm?
It's actually probably harder than you would think, and Sarah on the panel nailed it, because if the investment teams and the sales folks are used to the institutional investors and sort of the lack of tax complexity, there is a huge learning curve to explain that as you go into the private wealth sector, or even as you expand globally, you're going to have a lot more sensitivity on the tax side, and that actually also translates into much more tax analysis required and tax modeling required on the investment side. So I think the way that we've kind of bridged the gap is to be almost embedded in our investment legal team on the investment side. And the relationships come and getting in front of the more junior people, giving trainings. We also work really hard to get our fund accounting team on the same page with us. I think that's kind of something that isn't, it's a little bit underestimated how valuable that is, because your treasury and your fund accounting teams need to understand the tax aspects to a certain degree, or at least why you're setting up these structures and how the cash flows need to go. So we really are working to integrate our ops generally, and that's been crucial and really has had wonderful results. On the sales side, I feel like the sales teams are getting it because their clients are the ones that are asking. And so they do value tax, although that's another area where speed becomes difficult because you can't really know the answer. We work to have tech help us to retrieve prior instances and kind of by jurisdiction, and we're still fine-tuning that. But specifically when you're in, Asia or Australia, you're going to have a day delay to reach out to your tax advisor on specific questions. So working to build an internal knowledge database that the tax team can utilize, and that's kind of another reason you need to build out your tax team, because it just doesn't work from a time perspective.
Yeah. And it's interesting what you said about the accounting aspects, because I do find that when something comes up after the fact in terms of some decision that was made about the tax treatment of something that is important to the transaction, it is not infrequent that something after comes up on the accounting side, which is inconsistent, which then you have a little bit of a, I don't want to say a battle, because I don't think people are trying to, I don't think it's like it has an ill intent in any way, but it does seem to be an area which creates some conflicts and usually means that one party actually has to win. I don't know if that's like, and win being a relative term, obviously, but one has to be the right one, and one has to be the one that follows the other. We always talk about this internally as tax and ERISA. So
Fair.
ERISA always wins because there's only so many things you can do to address ERISA, and so we are pretty creative on the tax side when we have unfounded some ERISA issue that we didn't know existed. How does that sound like something that you've experienced in terms of kind of the tension between tax and accounting? And I don't know that people sometimes realize that those are two different things in private equity, that they're actually two different teams and they have to effectively work together to get to the right answer.
And then when you add your public company on top, it's sort of like three teams, because they have different issues under GAAP than our funds GAAP do. So, I mean, this is the initiative that we've been taking for the past couple of years. And I think, as I said, I think we've been really successful to make sure that when I think something's great for tax, it doesn't blow up the fund accounting team or create a situation where our service providers, it's actually often the service providers didn't get the translation as to what that should have looked like or what should have been done there. And so, we work with our fund accounting team to get our fund administrators on board with what we're envisioning, and then also often bring in our corporate department as well. When you're getting into the evergreen structures, you're doing things like warehousing or seeding, and that has a lot of implications for balance sheet. And so it's really important to have everybody on the same page. I don't think that we ever fight, but
I'm sure you never actually fight.
But I don't know that there's always a winner. It's easy to say that tax should win, but I think we really try to do a cost-benefit analysis. And I also think what is missed oftentimes is you create this wonderful structure that's, cutting edge, but it actually would require, 3 new accounting people to handle, and your service provider can't even do it.
Yeah.
So we're really working towards being mindful in our solutions.
Yeah. And I think sort of akin to that, another thing we talked a fair amount on the panel is solutions to risk allocation and issues that come up. And one thing that sort of stuck in my mind about that whole discussion, because of course Jordan is hyper focused on the expansion of insurance and the ability to create solutions for people, is that does that sometimes, like if someone is, comes to this panel and they're from Hamilton Lane and they listen to that discussion, do you find that sometimes what people hear in the outside world about what they might do sort of then creates an expectation of something that might be too risky, that you're not really interested in doing? And how do you handle that type of situation?
I do think that one of the roles, obviously, we have to manage tax risk, right? That's one of the roles for the tax department generally, and then elevation as the risk is more severe. But I really think that's the job. I do think people are working to be creative, to come up with sort of exciting new investments, structured finance, and when we're looking at preferred, for instance, there's a lot of partnerships. So the preferred isn't preferred for tax, actually. And trying to manage leverage blockers is a perfect example. There's some risk there depending upon if you can meet the portfolio interest exception, and just really there's tax risk, and then there's risk that the modeling given to you by, or the modeling that you've done for the portfolio company or the sponsor won't pan out. So I do feel like you have to manage sort of, here's the tax risk, but that tax risk is for these sets of facts. And you have to sort of work with the investment teams or whatever the situation is, whether it's fund accounting, to assess everyone's risk and then come to a place that everyone can get comfortable. We have a risk committee, so to the extent things are really heading up a decision or needing a decision point, they would go to the committee, and we kind of have some strategic committees internally that we often use for sort of one-off issues that come up, which we find they do come up often in the global evergreen space, because our sales team is very creative and our investors maybe, I don't want to say they're demanding, but they know what they want. Yeah. And we're trying to make sure that we can, again, achieve a result without breaking our admin and creating a NAV situation. So, right. I think I circularly answered that. I don't know if you're talking specifically about insurance, but.
No, I think it's just, I think you did touch on sort of the point, which is that every set of facts is unique, and I think there sometimes is a tendency, just human nature, to kind of jump to the last thing that you did, and well, it was okay then, so it must be okay now, even though the facts are totally different. And someone, is speaking to someone, and this happens all the time. I know you know this. All my clients talk to each other, which I think is great. I think it's a real support network for people who are in your position to have that exposure. Sarah Verkest also talked about this when we were talking before the panel about the importance of the relationships with people and other private equity sponsors, and in particular with legislation, when that's coming out, how people are thinking about it. What is the impact of that? How does it impact everybody? How can you gather together as a community and use different sort of lobbying groups and things like that to try to manage things that are common to everyone? But even things that are common to everyone have differences depending on the facts, which is something, again, it goes back to the kind of education process of working closely with other professionals and making sure that they understand why what we did the last time doesn't actually work here. I think it seems like an important part of your job.
Yes, it is, and to be able to understand and point out that it's not the same set of
Right.
facts, because that's probably sort of getting back to why do you need internal people?
Right.
That's easier for someone on the inside to do than it would be if the investment person or the salesperson took it to outside counsel or outside tax advisors. The insight of institutional and historic knowledge is definitely crucial, and agree to have people to call just to lean in on, specifically in the regulated investment company space, or just audits, or how are you thinking about this? It is very valuable, and I think us tax folks are not very competitive, so we're happy to share, nothing confidential, but
Yeah.
we're happy to share experiences, and that is a support that is helpful. It gives you a feeling like, okay, we're in the herd.
Yeah, and
which
I
is
think
the tax goal.
exactly, and I think that's the same on the advisor side, is the ability to share the market.
Right.
And what, sort of straight down the middle market is. And there are areas of the tax law which are not clear, but as you said, you don't really want to be here or here, you kind of want to be here. And so
Exactly.
the ability to kind of interact with other tax professionals and advisors, I think, is helpful in that regard as well.
Very helpful, and I think that it isn't as easy as one might think to find the right partners. It's a bit nuanced and may be different from jurisdiction to jurisdiction, so you can't just say, this is our law firm globally.
Right.
I think it really does depend on the people you're working with and what they see and their knowledge base and their ability. I mean, specifically in the tax world, there are outside tax counsel that are able to translate and be practical, and there are plenty of outside counsel that just get mired in sort of the granularity of the code. So I think finding the right partners to help you navigate the expanding structures and just investor base is essential for success.